All right, guys, welcome back to the Independent Investor Channel. It's great to be with you. I get asked this question all the time, Ryan. How's the portfolio doing? Are you outperforming the market or are you underperforming the market? Statistics would show, I guess, that self-directed investors don't fare very well in the market. I'm an example of somebody that is absolutely beating the market. In this video, I'm going to run you through the statistics for the last 5 years that I have to render to you guys. We are beating the market, and that's great. Kind of want to dispel some notions with regard to the potential of maybe seeking out some alpha in the stock market, but doing so by taking on very little risk, to be honest with you, relative to just investing in the broad market. There's certainly some benefits to seeking out your exposure. You guys know I invest passively, I invest actively, and I invest in dividend stocks. So without further ado, I'm going to kind of drop you in and show you these statistics, and I really hope you enjoy reviewing how the portfolio has performed since inception, guys. So I'll drop you into the portfolio. Please enjoy. All right, this will be super fun, guys. I've dropped you into my Merrill Edge account. This is going to be an accumulation of the performance over the entire portfolio, 3 accounts to be specific, the joint brokerage account and the 2 Roth IRA accounts. This is going to be pretty fun. You guys are going to understand. I mentioned a couple weeks ago during a live stream these numbers, and I'm not sure if it quite has the same impact. Just coming in here and showing you how the numbers shake out. But the time frame we're looking at here from November 21st, 2014 to October 11th, 2019. So it's appropriate to start looking at these just shy of 5 years. Nice round number. Why not? We can go in here and look at this. And I don't want people to look at this and say, wow, Ryan is outperforming the market, therefore I can do it. I don't believe that that's something that folks, if their sole goal is to outperform the market, I think people are going to really fall short of those expectations if that's their entire goal. My goal over the last 5 years has really just been to invest in the highest quality stocks and passive ETFs that I can, and by doing so, I found that the level of risk that I've had to take on has been relatively low, and we've been able to generate a little bit of alpha, so I'm very proud of this. I mean, the numbers speak for themselves, but for the range over the last 5 years, we'll call it 48% on the cumulative rate of return. And you can kind of see here how the account has evolved. It's been interesting. The same time frame, they've just carried the numbers down from the graph and demonstrate those numbers. Look here, guys, at the year 2019. I'm pretty proud of this. This is pretty awesome. 21% here as opposed to the S&P at 1849. The cumulatives have carried down 48 and 44 respectively. But the numbers are here. These aren't made up. These are right out of the account for the same time period as I've disclosed to you. So interesting enough, we've been able to see how we've been able to perform and build this portfolio up for over the last 5 years. It's been a real journey. It's been a real fun ride. And just starting the Independent Investor Channel just 3 years ago, I hope a lot of folks look at this video and get excited for themselves. I don't need you to look at my portfolio and say, wow, I wish I have that, because there was a time in my life where I didn't, and this just takes a concerted effort. You have to make it a priority in your life to go after building wealth, and there's not going to be any 2 roads the same. And that's a really important takeaway from you guys. I'm trying to define for you guys and show transparency through a testimonial on what road I've walked. I just showed you a snapshot of the last 5 years, so a fairly small aspect of the total road that I've walked over my investing career. But it's nice to see some of the takeaways and some of the themes that I've used to generate this level of wealth. Something really important to take home is, the fact that I've been able to work really hard and generate this wealth. But when I talk about the individual investor taking all the risk, but also taking and keeping all the reward on their side, please keep that in mind, guys. I've worked really hard to generate this alpha over the market, But think about how much of it is tax protected at this point, how much of it is wealth preserved, how much of this is being lost out the back door to dividend reinvestment fees, dollar cost average fees, annual fees, management fees, and every other hidden fees. The designation over at least the two accounts here and the joint brokerage account really doesn't apply to those at all because I just hold the ETFs in that account. But for the self-directed accounts, I'm not subject to any of those fees. And that's really the huge takeaway. If you guys want the silver lining that exists on my channel, that's really the silver lining, because I think there's a lot of portfolio reveals now. I mean, they're a dime a dozen on YouTube. You can go in there and see the same tired 10 or 20 stocks of a dividend portfolio, and I think you miss the underlying takeaway of the amount of money that's tax protected and wealth preserved in this account. So I'll drop you back to a 3-year time frame just for entertainment purposes only, and you'll see here the outperformance drop. So I underperformed the market over the same time period. So I've more than made up for this average. Kind of an odd time frame, to be honest with you. 3 years really doesn't do a whole lot for me. I guess it would do more if I was outperforming, but that's fine. You know, no harm done. This is back October 2016 till basically the current on this time frame. But you can see how a little bit of underperformance there, and then we kick it back up. This is the real telling one. This is one of my favorites, obviously because I'm killing the market. But you know, interesting. I really, with the volatility up, down, up, down, up, down in the market, it's really interesting how it really hasn't moved much over the last year. So we look at a 1-year time horizon from last October until this October, and you can see here how much we've been able to generate. I mean, that we're 5 times what the market has rendered. So kind of an interesting takeaway from this, guys. There's all kinds of interesting things that you could be motivated by watching this. What's possible, how it goes against contrary themes that an individual investor typically underperforms. I'm not one of those. I'm doing quite well, and I'll continue to do that. Remembering the silver lining behind this is that the profit that's generated in the account is rendered by me. I don't share it with anybody. And then we drop back to the smaller time frames here, and you know, we're outpacing here by almost 2.5. And then month to date, I don't think that's a real applicable time frame. I mean, we've lost a little bit. The S&P has lost almost double what we've lost here just for the month. But year to date, this is a really cool one. This is probably one of my most favorite metrics, honestly, from January 1 within the calendar year. I like this one a lot. You know, 3 basis points or give and take a little bit there of outperformance there. So hope you guys enjoyed this. I thought this was really cool. I wanted to validate that comment that I had made in the live stream a couple weeks ago. And I'm not really sure if you guys picked up on the fact that I was basically saying that the outperformance is there. Certainly, but I also wanted to clarify what I want people to take out of this. I really don't want people to take the shallow message that outperformance is something that can be duplicated. But I also don't want people buying into the idea that outperformance is impossible either. And I don't want people to take and act upon that idea that outperformance is something that is impossible to render in a self-directed program, and opt into thinking that seeking representation over your portfolio is the best way to go, and it's not. I still contend that pursuing the self-directed approach to the stock market is absolutely the best way that individuals can go, and the quicker you can realize that and justify it for yourself, the better off you'll be. So guys, with that said, I'm going to kick you out to the next screen, and we're going to continue on with the comprehensive portfolio review. Thanks a lot, guys. All right, guys, welcome back to YouTube. Out of the portfolio, really great to be with you again. Hope you appreciated this review of how the portfolio has performed over time. Certainly, you know, what's possible. I think for a lot of investors that are scared of what it could mean if you invest on your own, Hopefully this dispels some of those concerns that you may have about the prospects of investing on your own. Hopefully you understand that by seeking representation through a money manager doesn't necessarily provide you any type of strategic edge. As a matter of fact, I contend that for a lot of people it provides a strategic disadvantage. You know, by investing directly in the market, the real takeaway here is the amount of money that's tax protected, but more importantly, wealth preserved within the account. Remember, that outperformance is all mine, and that's money that I can roll back into stock through dividend reinvestment, and that money can continue to compound and grow unobstructed going forward, guys. So please hit the subscribe button. Help us support the message that we're putting through. Leave your comments at the bottom of this video. Let me know your portfolio statistics. Certainly, we can strike up a dialogue that way, and share the video with anybody that you know may be interested in the topic, maybe looking at real portfolio reviews and results from a self-directed investor, guys. Thank you so much for tuning into the video, and good luck in your investment future.